Yo, so this strategy I'm about to show y'all is what turned me into a profitable trader and helped me to get multiple prop firm payouts. Not only that, it helps me consistently keep a green P&L on my live account. This strategy I'm about to tell you about is very beginner friendly. I think it's a great way to learn. This process is very simple, but the thing is that you have to execute it with precision. Before we get into that, if y'all like content like this, please don't forget to smash the like button, subscribe button, and notification bell. Now, before I give y'all this strategy, before y'all learn a strategy from me or anybody else, I want y'all to know that when you do learn a new strategy, it's not good to be switching a lot of strategies when you're testing it. You need to make sure that you're calculating your wins and your losses. What we're doing in this strategy is essentially creating a range, and this range is going to act as like a zone that's going to be like either the ceiling of the price for the day or the floor of the price for the day. Sometimes it does chop through this zone, and that's how we have lost days, but it's just part of the ratio. Now, before we get into this strategy, I want to tell you this strategy is very specific to the ES futures or the MES futures if you want to do the micros. It does work with other things. I have tested it, and I've been back testing it with other stuff. Like I've tested it with gold and MNQ, but it works best on ES. So if you're just starting out, don't start bouncing around to different shit. Stay on ES, test it on ES or MES, and just only do it on MES. I feel like a lot of times when people teach strategies on here, they don't tell you where to use it at. And you can have the best strategy in the world, but if you're using it on the wrong instrument, then it's still can have a bad win rate. So we don't want to put you in that position. So when you're trading this, the first thing you need to know is that you need to be trading either ES or MES futures. The second thing to know is when we're doing this, you want to make sure your risk to reward ratio is at least a 3-1 risk to reward ratio. Meaning for every $100 you risk, you want to be making at least $300. That's like the definition of good risk management. You don't want to be getting in trades where you're risking $300 to make $100. So anytime you get in a trade, you want to make sure your reward is at least double what you're risking. At least double, but preferably 3 times what you're risking, but at least double. So let's jump to the charts and I'll show you how to draw out this range. All right, y'all, we're here on the ES futures. Now, I already did this trade, so you see I already got this candle marked out, but we're going to go ahead and start fresh for you guys. But essentially, this is what we'll be doing. You see this candle right here? It's the 8 o'clock candle. We're going to mark that out from the range, so we're going to go ahead and start fresh. So I'm going to go ahead and delete this. So we're going to come over here to the drawing tool. So I'm going to click this and hold it, and that'll pull up this rectangle tool. I like to favorite mine because I use it a lot. So you see I got the star. Click the rectangle tool and we're going to find that 8 o'clock candles. And we want to put the rectangle from the top of the top wick to the bottom of the bottom wick. Put it in the range. Now you're going to drag that all the way out to noon. Now after we got the zone drawn out, that's our zone for the day and that's what we're going to be paying attention to. So after that, we're going to go ahead and switch to the 1 minute time frame. All right, so this is what it looks like on the 1 minute chart. And y'all notice I got this little midline right here. That's kind of important. So we're going to go ahead and click this box. And then we're going to go to settings. And then you can add your midline here. Since mine was already there, all you got to do is select this and it'll give you the midline. Now, what we're looking for with this range is a breakout of the range closer to 9:30. So you don't want to see a breakout around 8:30, 8:45. Breakouts after 9 o'clock, preferably closer to 9:30. So let's go and see what happens. The price breaks out around 9:12, which is closer to 9:30. So that lets us know that we're looking for a retest of this midline right here. And then we're going to look for a drop to the downside because it broke out to the downside. We're looking for a move to the downside. So what we would do after we see this breakout is we would put a limit order for a sell right here on this midline. All right, now when I put my stop loss, I like to put it right on the opposite side of this range. So I like to put it maybe like a little gap in between here and here would be where my stop loss would be. I just like to have a little bit of space for it to work just in case it comes to the top of that range. And then I like to have at least a 3-1 risk reward. So that means if I'm spending $21.25 here, I would like to make my take profit 3 times that, which would be around $64. So let's make that down here. Where I put my stop loss at, I can't change where the stop loss is going. The stop loss always needs to be a little bit after this range. I don't like to put it on the range. Some people do. I put it a little bit after the range just in case a wick comes out. So after I have my stop loss placed and I see how much that is, that's when I make my take profit, 3x whatever the stop loss is. So since this was $21, I made it around $64 for my take profit. So we see right here, when the market opened at 9:31, it came in and wicked and hit our limit order and got us into the trade. So right now we would be going short. Our stop loss is right here. Don't forget that. So we see down here at 9:36 we would have hit our target. We didn't even get any drawdown on this and it was a very quick trade. You're already done with your trading by 9:36. So it was a 6-minute trade, very fast, in and out, and that's how the strategy works. So to recap, what we're doing is we're defining this range based off the 8 to 8:15 Eastern Standard Time candle. We're waiting till close to 9 o'clock. After 9 o'clock, we look for breakouts. That'll give us a direction of which way we want to go. We're placing our limit order right on the midline and our stop loss right above the range, and we targeting a 3-1 risk to reward. If you keep your risk reward like this on every single trade, that means that every time you win, you would have to lose 3 times in a row just to break back even. That type of risk reward is what's going to put you in a good position to stay profitable, because at the end of the day, the strategy does not work every day. No strategy works every single time, and you want to make sure that when you do win, you're making enough to cover the times you lost and still stay in profit. There will be times where this may not work 1 or 2 days in a row. The facts are this strategy wins more times than it doesn't, and when you do win, you're winning much more than you're losing. So when you do lose, it doesn't affect you as bad. All of these facts are things that you need to take notes of. If you leave one of these things out, it weakens the strategy. Let's try with another example real quick. All right, in this example, I already had the range marked out, but you understand that what you would do is you would mark the top of the wick from the 8 o'clock candle from 8 to 8:15 on the 15-minute time frame, and then you would switch back to this 1-minute time frame and then look for a range breakout after 9 o'clock. So let's see how that works out in this situation. This is from Friday, January 30th, by the way. Go ahead, stretch it out so we can see a little better. Currently it's 8:30 right there, and the price broke out to the downside. However, it's not 9 o'clock yet, so we're not counting that. We're looking for breakouts closer to 9:30. So it's back in the range now at, what time is that? 8:40, it's back in the range. Breaking out to the downside again. However, it's not 9:30 yet. So it's back in the range. Now it's 9 o'clock. So we're going to start taking the breakouts a little more serious. So it's 9:05. It's just stuck in that range, and preferably on a good day, it's going to stay in this range until after the New York Open, but it doesn't always work out like that. So as long as it's kind of close to the Open, that's the breakout you trust. So you see it broke out right here at 9:30. It waited to the Open to break out, so it broke out to the upside. So right there, we would put a buy order in, which is the opposite of the last one we did. We put this buy order in, a buy limit order. We would put our stop loss right below the range, not on the line, just a little bit below it. See right here in this example, we'd be risking $31. We would make our take profit around $93. So let's make that take profit $93. All right, we got it in the 92.50, which is pretty close. But again, the whole goal is you see where your stop loss is, how much that is, and you want your take profit to be at least 3 times that number, or at least close to 3 times that number. You don't want to be greedy. So in this situation, I went a little bit under than over, but it's close to a 3-1 risk to reward ratio. And we'll see how this would have played out. So remember, I'm not in this trade yet. It just broke out there. My limit order is right here. On the next candle, it comes back in. It looks like it almost touched it, but on this candle right here, it wicks down here, it would have touched it. And this could have been a little scary because it is close to the stop loss, but you see it didn't break out that range. So right now we would be in the trade. The price goes up, and our take profit is right there. So right here on this candle, we would have hit our take profit at 9:36. So basically you would have been in this trade from this candle at 9:32 to 9:36. This would have been a 4-minute trade. You would have made $92. You would have won. I hope y'all found this video helpful. Please take this strategy, back test this strategy before you go live with it, because even if you feel like you got it, it's something that you need to just practice the execution for at least a week. And, just make sure that this is a strategy that aligns with the way that you like to trade. So this is a strategy that I use every day. It's not the only strategy I use, but it is the first one that I used that got me profitable. And really, I could be profitable just trading this strategy alone. I put this information out here for free because I know a lot of you guys can take this information, and once you back test it and learn like the nuances of it, you can take it and run with it. So I hope this helps y'all to become better traders. This is the strategy that helped me to become profitable, and I still use it every day to this day, even though I use other strategies. If you use the information in this video and you follow all the instructions I just gave you, you should be able to become a profitable trader and take off running. But if you guys need some extra help or you like somebody to just walk you through the process, I do offer coaching. Just ask me in the Discord. If y'all want to join my Discord, I got a link to my Discord in the description below. If y'all interested in the other strategy I use, let me know in the comment section below and I'll make a video showing how I do the other strategy as well. I really hope this video helps somebody to get profitable. If it helped you get a green month, let me know in the comments below. I want to thank y'all for watching. Please don't forget to smash the like, subscribe, and notification bell, and I'll catch y'all on the next one.